The old or the new tax regime? Which one should you choose? You'll find out by the end of this video, since in it I'm going to share how income tax works and also going to take you through a very easy to use Excel sheet that I have made that will tell you exactly which tax regime is right for you. Because selecting the wrong regime can be a very costly mistake. To give you an idea, there's a way you can pay zero tax on a salary of 12 lakh rupees per year if you are smart with your tax planning. I'm going to share how you can do that, but in this case, it would have only been possible had you selected the old tax regime. In fact, if you had instead chosen the new tax regime, you'd have had to end up paying 76,440 rupees in taxes. I'm going to go through the sheet that I've prepared for you in just a bit, and you can also download it, by the way, for free through the link in the description. Now, just because I shared this example of 12 lakhs, it does not mean that the old tax regime will always help you save more money than the new tax regime. The regime and how effective it is for you depends entirely on your salary and how you've planned for your taxes. Now, the biggest difference between the two regimes is that in the old tax regime, you can claim exemptions and deductions that reduce your taxable income. I'll also explain what these exemptions and deductions are in just a bit. But you cannot claim them to the same extent in the new tax regime, but the new tax regime also has other benefits. And all of this at the moment becomes even more important because from this financial year onwards, the new tax regime is going to be the default one. So when you're filing your taxes, the new tax regime will be automatically applied if you don't manually select the old regime. Hello everyone, if you're new to the channel, I'm Udayan Adhye and I've been licensed in the financial services space in India since 2015, first in insurance and then in mutual funds. And so far, I have helped over 1,000 families make better financial decisions. But keep in mind that while this video has the new versus old tax regime calculator and a lot of other useful tax related information, when it actually comes to filing your taxes, it is always advisable to speak to a practicing CA because they can understand your situation and help you with personalized advice. Having said that, to truly understand which tax regime you should choose, it's very important to know how taxation works. So I'm going to ask you a question and you have to answer it before I reveal the answer. So let's say you're earning 20 lakh rupees per year. Now that technically puts you in the 30% tax bracket. In that case, do you think you have to pay a tax of 6 lakh rupees, that is 30% of 20 lakhs? I'm going to give you a second. No, absolutely not. The 30% tax is not applied to your entire income, which in this case is 20 lakhs. Instead, specific brackets of income attract a different tax rate. I'll first take you through the tax brackets of the old tax regime and I'll share my screen for this so that it will be crystal clear. So here you go, your taxable income is 20 lakh rupees and for an income between 0 and 2.5 lakhs as per the old regime, you pay zero tax. Then for an income between 2.5 to 5 lakhs, you pay an income tax of 5%, which is about 12,500. So in fact, let's calculate this on Excel itself so that we can understand this. So there you go, the first slab is 2.5 lakhs. We can just drag this down and you will see that the tax brackets, the size of it increases as we go along. And because we have considered an income of 20 lakhs here, the final tax bracket is almost 10 lakhs. Now in this case, the first tax bracket will attract a tax of 0 rupees because it's 0%. And once again, if I drag this down, then you will see how different brackets of income attract a different kind of tax. So the overall tax as per this calculator, and I'll get into the specifics of it in just a bit, is about 4.12 lakhs. That is your liability. Now let's say though your income is 5 lakhs and not 20 lakhs. Now in that case, obviously these two other tax brackets are not at all useful for you. You will notice that the tax payable is 12,500 rupees. Now in this case, there's a small exception. Because your income is under 5 lakhs, you don't have to pay any tax because you're given a tax rebate of 12,500. Now think of this rebate like an automatic discount or a coupon code that makes your tax liability zero in this case. So this is something that is a part of the old tax regime where if you are earning 5 lakhs or lower, there is no tax whatsoever, even though the tax rate, if you have a higher income, is 5% for income between 2.5 and 5 lakhs. We'll now go back to our example of 20 lakhs. It's very important here to understand that you don't have to pay tax on the income that you have earned, but you have to pay tax on your taxable income. Now I know this can get a little confusing, so just stay with me for a second. Earned income is the money that hits your account for all the work that you do. Taxable income, on the other hand, is your income after you pay for certain key investments, insurance, and other expenses. Now, all the items that can reduce your earned income are pre-decided by the government. This is shared at the time of each budget session. Now, the goal with tax planning is to reduce your taxable income, and I'll share how you can do that legally by using various deductions and exemptions. But just think about it. If your taxable income here is 20 lakhs, then for the final bracket, you're paying 30% of almost 10 lakhs, so 3 lakhs in taxes. What if your taxable income becomes 15 lakhs? Now, in that case, the tax that you pay for that final bracket is half, is not 3 lakhs anymore, it's 1.5 lakhs. So that could be the impact of good tax planning. Let's also quickly go through the tax brackets of the new tax regime, which you will notice there are a lot more brackets first of all. And also the 30% taxation starts only after 15 lakhs, not 10 lakhs like the case in the old tax regime. Now, once again, for the first 3 lakhs, there is no taxation. So we'll just again create these income slabs. So there you go. Now we'll start calculating the tax for the new tax regime and the various tax slabs. So the income bracket into the tax rate. We'll just drag this down. So you'll notice that the total tax as per the new tax regime for an income of 20 lakhs is 3 lakh rupees, whereas if we go back to the old tax regime, that is 4.12 lakhs. But like I told you earlier, that the old tax regime allows you to reduce your taxable income using various exemptions and deductions. Now here's a list of the deductions that people usually take and which tax regime allows you to take it. As you can see, you can only claim 2 deductions if you're opting for the new tax regime. First up is a standard deduction of 50,000 rupees that is given to every salaried person. And secondly, your employer's contribution to the NPS, which is the National Pension System. So just like the old tax regime, even the new tax regime has a tax rebate that you can avail. This tax rebate is applied if you earn an income of 7 lakhs or lower. And because of it, you pay zero tax if your income is under 7 lakhs. So just like with the old regime, we noticed that even if the taxation for 2.5 to 5 lakhs is 5%, even here you would notice that you kind of fall in the middle of 2 different brackets, where from 3 to 6 lakhs, a 5% tax of 15,000 is applicable. And from 6 lakhs to 7 lakhs, if your income is 7 lakhs, another 10% will be added. So 10% of 1 lakh is 10,000. And you add this 15,000, that becomes 25,000. So in the event that your income is 7 lakhs or lower, you pay zero tax because of this magical rebate that the government gives you. But it's also very important to know that even in the new tax regime, you can avail the 50,000 rupee standard deduction. Now, because of that, if your income is now actually 7 lakhs plus 50,000, that is 7.5 lakhs, you end up paying zero tax. And that's why if you earn 7.5 lakhs or lower per year, you should definitely, without even thinking twice, select the new tax regime, because that straight up makes your income zero. But keep in mind, above 7.5 lakhs, this doesn't make sense anymore, and you have to actually calculate and figure out which tax regime to select. And we're going to do exactly just that now by using my free new versus old tax regime calculator. And once again, you can download it for free using the link in the description. First up, right below, you will see 3 different options: non-metro cities, metro cities, and tax slabs. Ignore tax slabs entirely. If you live in a metro city, just toggle over to the next sheet and enter your details here. In the world of taxation, 4 cities are considered as metros, that is Mumbai, New Delhi, Kolkata, and Chennai. Now, once you enter all the details in this particular sheet, this question box here will tell you which tax regime to choose. And I'll take you through each and every point here so that it becomes crystal clear. So the very first information that you need to share with the Excel sheet is that if you live in a rented house, let's say in our hypothetical example where you earn 12 lakh rupees, you do, and the rent that you're paying is 30,000 per month, which is about 3,60,000 per year. Let's enter your income as 12 lakhs, and the sheet auto-populates basic salary, considering it to be 50% of your total income. In that case, if you don't have dearness allowance, which I'm guessing you do, just enter that value here. If your employer is contributing any amount to your EPF, then put that in here once again. So let's say they're contributing 1,800 rupees per month. That is about 21,600 rupees per year. If your salary structure has an HRA component, which let's say in our hypothetical example we do, we'll enter that as 2 lakhs. Now, if you have children and if your salary slip has a provision for children's education allowance or children's hostel allowance, then just enter the values here. You can get maximum children's education allowance of 1200 rupees per year, and if you have 2 children, which is the most you can claim, 2400 rupees. But let's leave it blank, let's not complicate it, because a lot of salary slips do not have that in place. Now, when it comes to leave travel allowance, this is something that you can claim 2 times in 4 years, and you can claim a maximum of 2 lakh rupees every time. So let's say it's one of those years where you're claiming it, you can just enter 2 lakhs, or if you want to average it out so that the tax calculation becomes more lenient, we'll enter 50,000 rupees. So there you go. We'll also try out a different example once everything is been filled out. If the LTA goes to its maximum amount of 2 lakh rupees. Let's leave professional tax as 0, and then do not edit the colored cells, because those are the formulae that calculate everything based on what we have entered. Then with respect to deductions, here is where you probably will need some explanation and understanding, because the first part is more or less your salary slip, so that you would know exactly. So first up is a standard deduction of 50,000. No matter how much you earn, where you're investing, whether you rent or not, just enter 50,000 here, because that is something that is standard. That's how it gets its name. If you notice, something interesting has been happening here, right? The total taxable income is getting calculated as we start entering these values. That's number one. Secondly, the total deductions and exemptions, as you can see here, are also getting added up. And finally, we are also getting to know what is the total tax that you have to pay as per the old regime and as per the new regime real time as we fill this up. Because we are using 12 lakhs as the number and we want to pay 0 tax on it. The goal, if you remember the first part of the video, is to bring your taxable income under 5 lakhs under the old tax regime, so that your income doesn't become taxable at all. Right now it is 8.78 lakhs. Can it go under 5 lakhs? How to get there? We will soon find out. So we have entered standard deduction of 50,000. Then comes section 80C investments. Now these are premiums that are paid for life insurance policies or mutual fund ELSS investments that someone makes in the financial year. Or if you have children, the school fees that you pay, or if you're investing in the Sukanya Samriddhi Yojana. In the description of this particular video, to make life easier for you all, I have listed out the various instruments that can be used to avail the section 80C investment and the deduction, and also other minor details for each of the deductions. So let's say you're investing 1.5 lakh rupees in ELSS mutual funds in a year. It could be any one of those instruments, but I've entered that here. Once again, notice how the taxable income has changed. It's not changing for the new tax regime, because the only deduction that you can use so far is the standard deduction. So for a salary of 12 lakhs, you've used a standard deduction of 50,000 and your taxable income is 11.5. Then let's say you are again investing 50,000 rupees, which is the maximum investment you can make in an NPS tier 1 account. Now, in my opinion, NPS tier 1 accounts are excellent investments, primarily because the money that you invest here, let's say it's 50,000, which is the maximum, you're maxing it out. That has a straight up deduction. So if you're in the 30% tax bracket, you straight up say 16,000 rupees there. At the same time, this money, you can choose which assets it can get invested in. So you can choose whether you want an equity heavy portfolio or bond heavy portfolio. And NPS investments, if it's an equity heavy portfolio, have generated about 12% returns over a 5-10 plus year period. So that is a fantastic return. Tell me in the comments if you want me to make a dedicated video on NPS investing, because the best part about this is that once you retire at the age of 60, that entire accumulated corpus of 50,000 rupees getting invested every year and that money growing to a larger amount because of that 12% return. Remember, it's not guaranteed because it's linked to the stock market. But in that case, that entire amount becomes tax-free. So that again has an added benefit, because otherwise equity taxation over 1 plus year is 10% of the profit that you make. So there you go, 50,000 rupees you invest. Then comes the interesting part, which is the employer's contribution to the NPS account. And if again your salary structure provides for this, you can enter that value here. Let's say in this case it does, and we will enter 60,000 rupees. 60,000 because we are considering 10% of the basic plus DA. Now, in that case, once again, you see that old tax regime has an income of 6.18 lakhs, but again, new tax regime has gone down because this particular section is the second deduction that is allowed, second and the last deduction that is allowed in the new tax regime. Then let's say you're buying health insurance for you, your spouse and your children. All of you are under the age of 60, and the plan that you're paying for has a premium of 30,000. The maximum deduction that you can claim is 25,000. So even if you're paying 30, 25 will be considered. Then let's say you're buying health insurance for your parents. That also comes under section 80D, but it has a different amount allotted to it. If your parents are under the age of 60, you can avail a maximum deduction of 25,000 rupees. And if they're above 60, you can avail a maximum deduction of 50,000 rupees. Let's say your parents are over the age of 60. So we'll enter 50,000 rupees here. Now, see how the taxable income is going down rapidly. It's now 5.43 lakhs. And the goal is now to reduce 43,400 more. So we now have 3 deductions left. And let's see which ones we can qualify for. Remember, this is the most common list of deductions that people usually take. There are certain other deductions too, which you will find in the master sheet of deductions in the link down below. You have interest on education loan. Now, if you have an education loan, there is no limit on how much income tax deduction you can claim on the interest. So if you're paying an interest of 5 lakhs per year, you can entirely claim that 5 lakhs. If you're paying 1 lakh, you can claim that entire 1 lakh rupee deduction. So let's say in this case, it is 1 lakh. And what that does is, it reduces your taxable income as per the old tax regime under 5 lakhs. And because of that, the tax as per the old tax regime is now 0. Now, you may be in a position where you do not have this education loan. So we'll make that 0. In that case, if you're donating something, you can again enter that. You can tweak around with the sheet. It's all yours to use. The final common deduction is interest on home loan. That's a popular one. A lot of people are buying homes. They're getting home loans. They're paying interest on it. Up to 2 lakhs of interest, you can get a deduction. So if that is you in this case, again, your taxable income goes under 5 lakhs. In fact, it's now 3.43 lakhs. And because of that, again, the tax that you have to pay is 0. Now, one question that some of you may have had is, how can you claim both home loan interest deduction and HRA or rent as well? Because isn't it logical that if you're renting, you don't own a house? Now, there are some special situations where you can claim both HRA or rent and the home loan interest deduction. One classical example of this is that, let's say you are living in a city where you're working, but you're buying a house in your hometown where your parents or family is staying. So you're claiming interest on that home loan for the house that you've bought in your hometown, and you're paying rent in the city where you stay. That's just one scenario that I'm sharing with you, how you can claim both HRA or rent and home loan interest. But here comes the most important point. I am making this video for you to understand taxation better and for you to get a fair idea as to which tax regime you should select. But it becomes supremely important if you're confused about taxation to consult a practicing CA. Because CAs do this day in and day out. They can talk to you, understand your situation and offer you personalized advice. They may charge you between 2,000 and 10,000 rupees depending on how complex your particular financial situation is. But believe me, that is money well spent. So talk to your friends, talk to your colleagues, see if they're happy with this CA and then get introduced to them and use their help while filing taxes because they can really do wonders. And by understanding your situation specifically, they'll know the nitty-gritties. They can help you maybe save more tax. They'll maybe tell you, from the next year onwards, choose the old tax regime and we'll start planning for taxes in a particular way. So there you have it. Check out the rest of the resources in the description. Share this video if you liked it because a lot of effort goes into making these videos for all of you. And I'll see you in the next one.